If you haven't noticed, recently the stock market has been a wee bit more volatile. We're experiencing levels of volatility that we experienced during the financial crisis in 2008, 2009, and the Great Depression. For many, this has been pretty intense. If you've been able to handle this, then you can handle just about anything the market can throw at you. Any stock index moving more than 2% in a day is an eye opener. A 10% move is huge and the largest since the crash of 1987. With the market whipsawing on a daily basis, investors are likely wondering how to temper the volatility of their portfolios. As you can read by many news headlines, investors are losing their minds. So, let's take a look. At this point, nothing seems to be working in the markets. Bonds were good before, but no more as wacky things are happening in the bond market. Bonds aren't really able to provide any diversification benefits as risk parity strategies unwind. It's a strong possibility that we may go negative on rates sooner than you know. But there's gold. Gold is supposed to be a safe haven in times like this, but it isn't because of liquidation issues. And so, GMAC, gold has been renamed to unobtainium, worth its weight in Purell. Commodities don't help either. What about real estate? Nope, we got real problems there too. The cold reality is that in a crisis, most often, everything moves together. And that's the problem. Everything's moving together. Someone is losing money over here, so they need to sell a winner over there. And that's what's happening time after time after time in the markets right now. Stocks, bonds, currencies, gold, everything is moving together like a herd of lemmings. And you have no idea where the weaknesses are until it's too late. As most investors have found out recently, they possess fragile portfolios. Again, the cold reality is that we are all, more or less, long only investors. Hence, every once in a while we get blindsided. So, is there any hope? The answer is yes. You can be a contrarian. In today's environment, it might be called anti-social investing. But to do this, you will often be betting against the crowd. If investors are excessively bearish, you're bullish. And if they are bullish, you become bearish. And about right now, I'd roll out the quote from Warren Buffett, but I won't because you already know it. All right, I'll go ahead and say it. Warren Buffett says, be fearful when others are greedy, and be greedy when others are fearful. And that's a perfect definition of a contrarian. And the benefit of being a contrarian, it often puts you in low risk trades where there is significant asymmetry. In other words, the risks are in your favor and you can make more than you can lose. What you need is a bit of experience and a small sense of crowd psychology. Of course, you have the benefit of our charts where you can get a better picture of what's going on. And then you'll be risking a little to make a lot, rather than risking a lot to make a little. Whenever you invest, you need to consider the margin of safety. When you invest this way as a contrarian, you tend to be less exposed to large shocks. Nothing is perfect, but you'll have gone a long way to build a portfolio that can gain from chaos. And it always helps to have a hedge. For me, I sell long-term out-of-the-money calls, but that's a topic for another video, hopefully soon. So, for today, stay safe and secure. And that's ChewDog Charts. Thank you.